The Bank of Japan raises interest rates to their highest in 17 years. So the BOJ pushed up their short-term policy rate by 25 basis points to leave them at 0.5%. The central bank also revised up their inflation forecasts while the yen rose sharply against the dollar in response. Vicky Pryce is Chief Economic Advisor at the CEBR. Vicky, the BOJ hadn't raised rates since last July and now they've hiked just days after Trump's inauguration. Is the timing today a little bit odd, perhaps?
Yes, I think it's a very interesting timing. And of course, as you highlighted, it's only gone up to 0.5%. So we're talking about a very, very small increase in rates by comparison, or at least the level by comparison to everybody else. But I think what they're doing is, yes, inflation finally is positive in Japan. Wages are doing reasonably well. They're rising faster than inflation, which of course is good too for growth for the future. But what I think they're worried about is what the implications of any Trump tariffs might be. And of course, indeed, Trump in Davos made it very, very clear that he was intent on putting tariffs on everything from everywhere. We don't quite know exactly how high those would be. But the interesting thing in the commentary about the Japanese move is that they're raising rates now so that they can reduce them later if the economy starts struggling, which it could do if indeed they have a problem in terms of exporting goods to the US in particular, and what the implications would be elsewhere.
Now let's turn to Europe, and we've also had PMI data out today. In Germany, the data showed that business activity had stabilised in January, but in France, its service sector contracted again. What's your take on Europe's two biggest economies?
Well, what seems to be happening, again, interestingly enough, it's a wage issue. So inflation has come down so significantly, although perhaps not quite so fast in Germany, but wages are outpacing this. So the service sector is doing well. So you've seen a lot of activity. The PMI is showing that to be a consistent issue across Europe, not perhaps in France, but certainly in most countries in Europe because of the drop in the inflation rate. And also, of course, interest rates have been coming down. So people feel a little bit more confident to go out and spend. Not on the manufacturing side, which is suffering. The interesting thing about France is the uncertainty which we've had on the political front. I mean, now, of course, they have passed the budget. So the new prime minister seems to have managed to get some sort of agreement with various parties to do so. That should bring with it a period of sort of slightly greater stability. And we might see actually the service sector sort of moving up again.
You mentioned interest rates there. We have two central banks giving us an update next week, the ECB and the Fed. What are you expecting from both?
The general expectation is for the Fed not to really change rates right now. And of course, the issue of what the Trump tariffs might be on inflation in the US is a big question mark. Of course, he's talking about tax cuts and how they will influence, prices. That would be an interesting one as well. But I think the markets are generally anticipating that inflation will be higher in the US than would otherwise be the case. So the opportunity to cut rates has been missed, I'm afraid, to cut them faster. So the US may well end up with a period of, a longer period of rates staying where they are. I mean, the ECB is a different issue. Clearly, the data today might make them rethink a little bit, but I think the markets are expecting a number of cuts to come. So we are going to get, at the end of the month, more cuts in rates. They could be possibly within the next couple of months, 50 basis points declines. I think what the ECB is worried about is, again, the implications on growth of whatever may be happening internationally, particularly in the US, and how the Europeans might react. And there are those differences that you highlighted earlier between countries. And I think it wants to play it safe. It's still worried about what happened with the Eurozone crisis when we had deflation, of course, over a period. And I think that's the worst outcome they could see. So I think they are certainly intent on ensuring that one doesn't get into that position. So the overwhelming belief, I think, within the people who make the decision is that, and also I think the chief economist probably in the ECB, is that one could perhaps throw caution out in the wind for a short period of time and see what happens to inflation if they cut rates, as they might well do at the end of the month.
That was Vicky Pryce from the CEBR. And don't forget, you can get more news, analysis and videos like this one on Reuters.com.